Good morning, you're watching Market Cafe with me, Shreyansi Singh and Snehi Shah, and over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar, also tell you what brokerages are saying this morning as well. There's a lot to cover on the show, so first things first, let's take a look at what the international handover is looking like. Snehi, what does it look like to you?
Well, Shansi, not so great, but yet again the drop is not something big to worry about. But yes, Wall Street has declined. All three indices have declined when you look at Wall Street's intraday session yesterday. And stock futures have fallen as Wall Street weighed the latest earnings results and looked ahead to the Fed Reserve's favored inflation gauge. Now, the US GDP, which is another key metric that we received yesterday, increased at an annualized rate of 3.2%, largely propelled by healthy consumer spending. And we'll take you through more about the US GDP as we move on with the show as well. But when you look at individual indices, Dow was down less than 0.1%, a 23-point drop coming in for the Dow. Not much of a drop and not much of a worry over there. S&P 500 also down 0.2%. Nasdaq, however, is down 0.5%. So that is the indices that is lagging among all of the three indices on Wall Street. Now, Wall Street anxiously awaits Thursday's personal consumer expenditures reading for the month of January. Economists are bracing for a 0.3% monthly gain and a 4% year-over-year gain move as well. A higher than expected print could dent equities and signal that recent hot consumer price index and producer price index releases were on trend. Now, Thursday's session caps off February trading and another positive month for the three major averages despite a string of declines, raising questions around the sustainability of the AI-driven rally. Remember what Nvidia and Nasdaq have done in just the last week, and the Nasdaq is leading the pack with a 5.2% gain on the back of Nvidia's rally that we saw. The S&P 500 has jumped 4.6%. Dow has added 2.1% for the entire month of February. Now, this would mark the Dow's first 4-month winning streak since May 2021. The back end of earnings season continues Thursday with results from Best Buy, Hewlett-Packard, and Bath & Body Works. And other key economic figures are due out as well, including personal income data for January, Chicago Purchasing Managers Index data for Feb, and the pending home sales data for January as well. The New York Federal Reserve Bank President and CEO John Williams is also slated to moderate a discussion in the evening. So we'll be watching out for all the commentary that's coming in, and all the major averages are headed for yet another winning month, like I mentioned earlier. Now, well, today is an anomaly. It is leap year day, and we're also spotting an anomaly on Dow because even more notable is Dow's streak. Right now, if it closes the last session in February in the positive territory, the 30 stock index would clinch its 4th straight winning month for the first time since a streak ended in May 2021. Leap year coming one time in 4 years. Dow's rally looks like it's going to extend for the first time in 3 years. The index is currently up 2.1% on a month-to-date basis. So, well, that's the handover that's largely coming in from the US markets. European markets on the other side look rather mixed. DAX is up 0.2%, FTSE was down 0.8%, so that's a pressure point coming in on the European indices. CAC rather flat, but in the green, and stock 600 also on an overall basis down almost 0.3%. So, well, mixed handover coming in from the US markets and the European markets. Not much to worry about, but yes, 0.5% drop coming in on Nasdaq. But with that, Shreyansi, take us through what's happening in the world of oil.
Absolutely, and there's mixed pricing action when you look at oil. Now, crude oil futures were mixed as US crude inventories rose while OPEC Plus is considering extending its production cuts into the second quarter. So when you look at WTI, that dropped about 0.4%, settled around that $78 a barrel mark. And when you look at Brent as well, that came just 3 cents, settled around that $83 a barrel mark. US commercial crude stocks rose by 4.2 million barrels last week. According to the EIA, inventories have been rising in the US as the rate at which refineries process crude into finished products has declined in the recent weeks. Now, US crude and the global benchmark are poised for a gain of 6.3% for the month. First month futures contracts are trading at a premium to later months. Now, a premium for immediate over later delivery is typically a sign of a tightening crude market. So that's largely what we're seeing with crude. Now, of course, crude prices have also found support this month from the ongoing conflict in the Middle East as well. And OPEC Plus is considering extending its voluntary production cuts into the second quarter, according to reports. So that's also something that the market is going to be looking at. But when you look at gold prices as well, gold ticked up as traders trapped in for key economic data and comments from US central bank officials on the timeline of interest rate cuts. Lower interest rates do raise the opportunity cost of holding gold, so that's something that is key to note. Now, Bitcoin also continued its surge, shooting above 63,000 for the first time since November 2021, and that's an important move that we also saw when it comes to Bitcoin as well.
Well, we'll bring you more on Bitcoin